Good morning. Welcome to another episode of the Mizuho Week Ahead. I'm Boon Heng, market economist at Mizuho Bank. This week's theme is Russian roulette. The armed uprising in Russia, and just a couple of 100 kilometers from Moscow, by Wagner, the mercenary military force that has been backed and used by Russia covertly in the past and openly since the Ukraine war, despite being aborted, lay bare the risk of Russian instability from within. This rash act of sedition has revealed cracks and fragilities that now cannot be unseen. And this undeniably amplifies global geopolitical risks, with Europe being in the epicenter of potential geopolitical blowout, further complicating the existing war in Ukraine. Despite the brokered de-escalation, risks for military miscalculations remain elevated. And for the pragmatic observer, and arguably for the realist, the game of Russian roulette in real time is really far more discomforting than it is intriguing. Bond traders may not be in a state of heightened panic, given that the Wagner Group has stood down, with Prigozhin and his men promised safe passage to Belarus and the Russian military sphere. But perhaps there may be still some measure of haven play that could send USD yields lower than its European peers, given there is imaginarily greater haven value. Yet the greenback may retain traction in defiance of lower yields, thanks to geopolitical risks hitting up on the other side of the Atlantic. Although admittedly, more severe iterations of conflict may see gold being preferred. Risk assets may generally not fare so well, especially if geopolitical risks re-emerge. Finally, Asia may be trading more sideways than sliding precipitously. While softer risk sentiments and prospects of energy disruptions do pose threats, the fact is that initial reactions may be, rightly or wrongly, muted by perceived geographic buffer. China, though, may remain more of a drag factor than not, partly due to ongoing disappointment in terms of Beijing's shortfall on stimulus hopes, but the tail risk of reported Taiwan airspace incursions by Beijing could have the makings of a geopolitical curveball that dislodges the steadier sentiments within EM Asia. In any case, we prefer to retain caution. After all, in games of Russian roulette, it is not so much the partially loaded gun that is the danger in and of itself, for a statistician will tell you that it is a risk that may be calculated. In sharp contrast, it is the unpredictability of unhinged actors involved which converts undoubted risk into unpalatable uncertainty that poses the real danger. In EM Asia, Vietnam is set to release Q2 GDP that's set to remain dismal amid a global manufacturing downturn, taking a toll on its industry, with a power crunch exacerbated by the weather adding insult to injury. Expect dovish policy impetus and attendant dong slippage risk. Down under, RBA minutes and Australia's sticky and elevated inflation may provide second wind to Aussie upside, but on a very short leash, whereas vulnerabilities to the global downturn and China risks will rain on the parade for remaining Aussie bulls. For more information, please refer to our weekly publication or contact your respective sales desk and RMs.